Welcome back to the Crypto Intellect, your home for the latest crypto news, market insights, and everything happening in the world of digital assets. XRP holders, I have to say it again, I knew this would happen. And today, something happened that many people believed would never happen. We're talking about a moment that caught investors completely off guard and sent shockwaves through the crypto community. At the same time, the broader market is under pressure, prices are moving sharply, and traders are trying to figure out whether this is simply another temporary shakeout or the beginning of something much bigger. If you've been following this channel, you know that we always try to look beyond the headlines and focus on what's really happening underneath the surface. Today, there is a lot to unpack because the market is reacting to several major developments all at once. Some of them are political, some are financial, and some are directly tied to the future of crypto adoption. So stay with me because by the end of this discussion, you'll have a much clearer picture of why XRP is moving the way it is and why so many investors are paying close attention right now. The first thing everyone noticed today was the sudden weakness across the crypto market. Bitcoin experienced a sharp decline, falling to levels that traders had not seen for quite some time. Ethereum also struggled and briefly moved below key psychological support levels before recovering. Solana saw a similar reaction, dropping aggressively before bouncing back as buyers stepped in. XRP was not immune to the sell-off either, although compared to some other major cryptocurrencies, its movement looked relatively controlled. This is something worth paying attention to because when fear spreads across the entire market, assets that hold their ground better than others often attract investor attention later on. We saw panic selling, followed by bargain hunting, and then uncertainty as traders tried to understand what exactly triggered the move. The market environment right now feels extremely sensitive. One headline can spark fear, another can trigger optimism, and investors are being forced to react quickly. That combination creates volatility, and volatility creates opportunity for those who remain patient and focused on the bigger picture rather than getting caught up in every short-term move. One of the major stories influencing investor sentiment involves rising geopolitical uncertainty. Just days ago, many market participants believed that progress was being made toward a diplomatic resolution between the United States and Iran. Expectations were building around the possibility of improved stability, and markets generally respond positively when tensions appear to be cooling. However, new developments completely changed that narrative. Reports emerged suggesting that negotiations had stalled and that significant disagreements remained unresolved. Whenever uncertainty enters the global picture, investors begin reassessing risk. That doesn't just impact stocks, commodities, or foreign exchange markets. It affects crypto as well. The reason is simple. Large investors are constantly evaluating where to allocate capital. When uncertainty increases, money often moves more cautiously. This can create pressure across risk assets, including cryptocurrencies. What makes this situation particularly interesting is that markets are still trying to determine whether these developments represent a temporary setback or something more serious. Over the next several days, every statement, every report, and every diplomatic update could influence investor confidence. What caught my attention, however, was the market's reaction compared to previous geopolitical events. Usually, when major uncertainty emerges, commodities like oil experience significant upward movement. This time, while oil prices did rise, they did not explode higher the way some analysts expected. That tells us something important. Investors may still believe that negotiations could eventually resume, or that the current situation is not yet severe enough to justify a full-scale panic response. Markets often move based on expectations rather than confirmed outcomes. In other words, traders are not only reacting to what is happening today, they are also trying to predict what happens tomorrow. If sentiment changes and confidence returns, we could see a sharp recovery across multiple asset classes. If tensions increase further, we could see additional volatility. For XRP holders, understanding this broader macro environment is critical because crypto does not operate in isolation. Global events, monetary policy, institutional activity, and investor psychology all interact with digital asset markets in ways that many people underestimate. Interestingly, while crypto markets experienced considerable pressure, traditional equity markets showed a different story. Despite concerns surrounding geopolitical developments, major stock indices displayed resilience. The volatility index moved higher, indicating increased caution, but overall investor fear remained relatively contained. Stocks recovered from early weakness and managed to maintain positive momentum throughout much of the trading session. That divergence raises an important question. If stocks are holding up reasonably well, why did crypto react so negatively? This is where another major development enters the picture, and it may have had an even greater impact on investor sentiment than the geopolitical headlines themselves. Sometimes the market focuses on a specific event that changes perception. It doesn't necessarily matter whether the event is fundamentally significant. What matters is how investors interpret it. And today, one particular story quickly became the center of attention across social media, trading communities, and crypto news outlets. That story revolves around one of the most recognized Bitcoin advocates in the world. For years, investors have heard the same message repeatedly: buy Bitcoin and never sell. The commitment appeared absolute. Many people viewed it as a foundational belief that would never change. Then came the surprise. News emerged that a small portion of Bitcoin holdings had been sold. Now, before anyone jumps to conclusions, it is important to understand the context. The amount sold represented an incredibly tiny fraction of total holdings. In practical terms, it was almost insignificant. The sale was reportedly connected to financial obligations involving dividend distributions, rather than a loss of confidence in Bitcoin itself. Yet markets are emotional. Investors do not always react based solely on logic. Sometimes symbolism matters more than numbers. The fact that any Bitcoin was sold at all became the headline. And once that headline spread, questions started appearing everywhere. If someone who always said they would never sell ended up selling, even for a technical reason, what message does that send? This is where psychology becomes one of the most powerful forces in investing. Markets often react to narratives more than facts. The actual amount sold was tiny. It represented a fraction of total holdings. But investors began discussing whether this signaled a change in philosophy. Others argued that it changed nothing because the purpose of the sale was purely operational. Regardless of which side you agree with, there is no denying that the headline itself created uncertainty. And uncertainty is enough to trigger short-term volatility. We have seen this countless times throughout financial history. A headline appears, social media amplifies it, traders react emotionally, and prices move before deeper analysis takes place. By the time people understand the full context, the market has already made its move. That seems to be exactly what happened here. Whether this event matters long-term is another question entirely, but in the short term, it clearly captured attention and contributed to a more cautious market environment. As all of this was unfolding, another trend continued to concern investors. Capital flows into various investment products have shown signs of weakness in recent weeks. Some institutional products experienced notable outflows, creating additional pressure on market sentiment. When large pools of capital begin reducing exposure, even temporarily, traders pay attention. It doesn't automatically mean a major downturn is coming, but it does suggest that confidence may not be as strong as it was previously. Interestingly, XRP-related products have shown relatively stable performance compared to some other segments of the market. That doesn't guarantee future strength, but it does highlight the fact that investor interest in XRP remains alive and well despite broader market uncertainty. Many investors continue to view XRP as one of the most important digital assets when it comes to real-world financial infrastructure and payment innovation. That narrative remains a powerful driver of long-term optimism. Now let's shift our attention to one of the biggest developments that could influence XRP's future. A major announcement confirmed that dozens of large banks are moving forward with blockchain-based payment infrastructure for cross-border transactions. This is a significant milestone because it demonstrates that financial institutions are no longer treating blockchain technology as an experiment. Instead, they are actively integrating it into their operational frameworks. For years, Ripple supporters argued that blockchain would eventually transform global payments. Today, we are seeing more evidence that the financial sector agrees with that vision. The important question, however, is whether these developments directly benefit XRP or create additional competition. That debate is becoming increasingly important because banks are exploring multiple technological solutions simultaneously. Some involve public blockchain networks, while others rely on private systems designed specifically for institutional use. The concern among some XRP investors is that banks may choose to build and operate their own blockchain infrastructure rather than relying on external networks. If financial institutions can achieve faster settlement times, lower costs, and improved efficiency within systems they directly control, some wonder whether the need for XRP could diminish. It is a fair question and one that deserves serious consideration. XRP's core value proposition has always been centered around solving liquidity and settlement challenges. If competing systems begin addressing similar problems, competition naturally increases. However, competition does not automatically eliminate opportunity. The financial world is enormous, fragmented, and highly interconnected. Multiple solutions can coexist simultaneously. In fact, history shows that successful industries often support numerous competing technologies rather than a single dominant winner. The real question is not whether competition exists. The question is whether XRP can continue offering unique advantages that make it valuable within the evolving financial ecosystem. There are also several reasons why long-term XRP supporters remain optimistic despite these concerns. Many of the institutions participating in blockchain initiatives already have existing relationships or connections within the broader Ripple ecosystem. Furthermore, Increased adoption of blockchain technology by traditional finance validates the very thesis that Ripple has been promoting for more than a decade. Every time a major bank embraces distributed ledger technology, it becomes harder for skeptics to argue that blockchain lacks real-world utility. The conversation has shifted from whether blockchain will be adopted to how it will be adopted. That distinction is extremely important. Even if certain institutions initially favor private solutions, interoperability challenges may eventually require bridges connecting different systems together. That is where technologies associated with XRP and the XRP ledger could potentially play a meaningful role in the future. Another factor that often gets overlooked is Ripple's evolving business strategy. Years ago, many investors focused almost entirely on the idea of replacing existing payment networks. Today, the company's vision appears much broader. Stablecoins, tokenized real-world assets, enterprise liquidity solutions, and institutional financial services have become increasingly important areas of focus. This diversification matters because it reduces dependence on any single narrative. If one segment develops more slowly than expected, other opportunities may emerge. The financial industry is changing rapidly, and companies that adapt effectively tend to position themselves for long-term success. XRP's future may ultimately depend less on replacing legacy systems and more on integrating into a wide range of financial applications that require efficient value transfer and liquidity management. What makes the current situation particularly fascinating is that both bullish and bearish arguments contain valid points. On one hand, growing institutional blockchain adoption validates years of development and investment across the digital asset industry. On the other hand, increased competition means projects must continually demonstrate their value. Investors who ignore either side of the equation risk missing important information. The best approach is to remain objective. Examine the data. Follow the developments. Watch how adoption trends evolve over time. Emotional decision-making rarely leads to consistent success in investing. Markets reward patience, discipline, and adaptability. The ability to evaluate both positive and negative developments honestly is one of the most valuable skills any investor can develop. For XRP specifically, the next phase may depend less on headlines and more on measurable adoption metrics. Real transaction volume, institutional usage, liquidity growth, and practical utility will ultimately determine long-term value. Exciting announcements can create temporary enthusiasm, but sustainable growth requires real-world implementation. The good news for XRP supporters is that the conversation around utility continues to expand. Financial institutions, regulators, payment providers, and technology companies are increasingly discussing solutions that align with many of the goals Ripple has pursued for years. Whether XRP captures a large share of that opportunity remains to be seen, but the opportunity itself is clearly growing. As investors, it is important to remember that nobody has a crystal ball. Anyone claiming absolute certainty about what happens next should be approached with caution. Markets are complex systems influenced by countless variables. Economic data, geopolitical developments, institutional behavior, technological innovation, regulatory decisions, and investor psychology all play a role. Sometimes the market behaves exactly as expected. Other times it surprises everyone. The goal is not to predict every move perfectly. The goal is to position yourself intelligently, manage risk responsibly, and remain informed enough to adapt when circumstances change. That mindset becomes especially important during periods of heightened volatility, like the one we are experiencing right now. When I look at everything happening today, I see a market wrestling with uncertainty, but also a market filled with opportunity. We have geopolitical headlines creating caution. We have unexpected Bitcoin selling headlines capturing attention. We have institutional blockchain adoption continuing to advance. And we have XRP sitting right in the middle of a conversation about the future of global finance. That combination creates a fascinating environment for investors. Some people will focus only on the fear. Others will focus only on the optimism. The most successful investors usually pay attention to both. They recognize risks while remaining open to opportunities. They understand that short-term volatility and long-term potential can exist simultaneously. So yes, XRP holders, I said this could happen. Markets rarely move in a straight line, and unexpected developments have a way of appearing exactly when confidence starts getting comfortable. The important thing now is not to panic, but to stay informed. Watch the data, follow the adoption story, pay attention to institutional developments, and keep your emotions under control. The next few days could be extremely important for crypto markets as traders digest these headlines and determine what they mean for the road ahead. Whether you're bullish, bearish, or somewhere in between, one thing is certain. This story is far from over. Thank you for watching the Crypto Intellect. If you enjoyed this update, make sure to support the channel, stay tuned for more breaking crypto coverage, and as always, keep learning, keep researching, and keep your eyes on the future because the next major move could be closer than most people realize.